Hello, this is Cryptolyze. I hope you are well on this Friday, October 20, 2023. It is with pleasure that we meet today to talk about HBAR, the crypto from HEDERA hash graph. As usual, we will dissect it into two parts. A fundamental part, we will come back to what HEDERA is, to its current affairs. It's been a while since I last talked about the project, so there's quite a bit to see. And then, we will attack the technical part to project ourselves in the short, medium, long term on purchase prices, selling prices, and that starts right away. As a reminder, you always have the possibility of having free access to the educational course, which is a 60-hour training course worth 400 euros, which allows you to learn blockchain, crypto, investment, technical analysis, trading, everything to become profitable. Through 130 videos, 400 pages of guides, quizzes to find out where you are in your progress, and all for free. To have access to this lifelong training, simply use the platform of one of our partners. Everything is explained in the comments and descriptions. What is HEDERA? So I'm going to put my foot straight into it. HEDERA is a blockchain. On this, I know that there are people who are already writing their comments saying, but no, HEDERA is not a blockchain. I agree with you in principle. It is a distributed ledger based on the hash graph. And it is even what we could consider as a form of DAG, which is based on ABFT, the Byzantine Asynchronous Consensus, something which is rather classic. But to symbolize and simplify, we can consider that it is a blockchain a little bit like other typologies of technologies that we characterize as being blockchains, which are not necessarily blockchains, but which are the evolution of a form of blockchain, which is therefore schematized as the technology itself and the different advances. So, HEDERA is a blockchain which makes it possible to build smart contracts, therefore intelligent contracts which allow code to be executed in a decentralized way, and which have very low costs, a large transaction capacity, more than 10,000 transactions per second, and almost zero carbon impact. So they say negative because they compensate, but we are really on something which is really very, very weak, which is really one of the blockchains which consume the least. And that had a really Ethereum killer image for a while, and they really shifted that image. We are on something which basically had a real desire to offer a huge number of elements to be able to develop functional building blocks and build decentralized applications. The goal was really to have a blockchain that is public, in which we can build any type of decentralized application. That has changed a little bit, in fact. This image has really changed. Here is the new image in which we are really focused on businesses. Already, HEDERA was basically geared towards businesses with big partnerships. As we can see here, we really had big partners. And that continues because they are really focused purely on a development kit to put solutions for businesses. This is really the marketing arc of HEDERA, notably through their stablecoin studio, which allows the ability to build and validate stablecoins or stablecoins for entities, whether are public, private, depending on what they want, with directly integrating a form of KYC and money laundering validation integrated into the SDK, therefore into the development kit. And so we are really in accessibility to compliance. And when we are in this form of accessibility to compliance, it strongly means that we are moving towards a solution which can be used by institutions and companies which aim to work with institutions as well. They are really going with this approach because we are in the process of offering a form of verification of digital assets and tokenization. But behind it with communication that is around carbon negative saying that there is no consumption. And what's interesting is that we see on their site each time it says request a demo. And that's really actually the type of marketing narrative that we find when we go to BTWB. So here we are not in a process by saying I am in a form of BTOC to offer you an Ethereum killer. I am here in a process of selling my solution to companies or institutions to create uses box. All right? So here we are really in the marketing of HEDERA. And you have to understand that the commercialization of HEDERA, there are several phases in this type of thing. When we implement a software solution, because it is a software solution, it was lying around in one of the screens which was noted. So I would have to find it. I don't know if I kept it this screen. No, it's not there anymore. It was to globally provide a blockchain as a service, and that was really the very principle of HEDERA as well. So we are in this process. So there are integration costs, which are human costs. So generally there is a company that will sell the HEDERA solution and implement it, so there will be development costs. There will be integration facts. There is this whole part which will be managed, And then we will have after the use of HEDERA through its solution, in which there will be fees which will be paid mainly in the HEDERA token, which is the hash bar. Moreover, the hash bar serves several purposes. So we will find the small screen here serves several purposes. We will see the hash bar, which will be used in terms of fees. That is to say that it is something which will be used for transaction fees. Except that we know that we have transaction fees which are very, very low. We are talking about $1, so we are really in something which is very, very low. And then it will be used for governance and stacking, therefore network security, therefore something that is rather classic. So will the number of users and the number of implementations that there will be of HEDERA influence the price of the token? I don't think so. These are two things that are separate. We must understand that here we are not wanting to have a public blockchain in which we will have a drastic increase in the number of transactions per second, but we will sell solutions, which is the HEDERA solution, in which we will interface with a customer process, therefore a process of a company. And it is the service which will cost more than the transaction costs and utility. So this means that the money will be drained into the company that will operate HEDERA and not into the HEDERA protocol itself. And this is where, suddenly, when we are in a form of marketing like that, will the token itself be valued at the level of sales made by the company which operates HEDERA? I don't think so. Remember that when you own an HBAR, you do not own shares in the company that operates HEDERA. We own the token which is used to govern the HEDERA protocol, and not the company, again that is different, and which at the same time serves as a utility token. So we have something that is not linked to the profit that is generated by HEDERA, at least the company that operates HEDERA implementations. Just be careful about that. Nevertheless, we are in a tokenomics which is roughly diluted, 70%, which is rather correct for this type of project, and we are in a market cap which is already at 2 billion, which is relatively substantial. So even if it's rare, we still have an ecosystem that is relatively complete. We still have quite a few things. We have technologies that are arriving here, notably with ID through blockchain and decentralization, so we can create identities very easily with their SDK. Here we have the utility of the HBAR, which is a rather classic utility. You just have to be careful in designing the investment that you are going to have. You are not buying the benefits linked to the implementation here from HEDERA, but we buy a utility token which is used in HEDERA, and therefore the more utility there will be, yes, perhaps there will be a need to have more HBARs, but will this be directly linked? Not necessarily. So, on technical analysis, we have quite a few things to see. Firstly, we had an implementation of an Elliotist diagram with 1, 2, 3, 4, 5, which ended here with an ATH, which was quite strong, 0.6. We're going to put it back, a little less, 0.58, in which we finished wave 5, to then head towards a classic retracement in ABC, which was done in 3 time. And we are currently in the lower part. Moreover, this schematic is autistic. What is specific is that we have behind a schematic also of Wyckoff, with here a BC, Arkansas, ST, SO, Utah. So we have here a big distribution of Wyckoff with the row tests and the bearish breakout, which bring us into the spot zone, which is an accumulation of Wyckoff, in which we find a PSY, the selling climax with the SC, Arkansas, ST, and there we are in a consolidation of the ST. So what is interesting to see is that we still have very few candles and very little volume on HBAR. So we must take into consideration that it is not an asset that moves a lot. Since June 2023, we see that we have had very little movement. Same with the breakout that there was in January 2022. So we had the FTX. Then HBAR sank to have the big reaction on 2023. We see that we are in a breathing phase. So overall, we are in a range phase, which is characteristic of an accumulation of oblique off. So here we are really in a rather simple and textbook thing, which is rather classic in a form of accumulation. So we are in the spot zone in which if we are ever interested in this protocol, in fact, we can have a price, which is interesting. We must take into consideration that generally in an accumulation, we wait for a low liquidity gain. Okay, so we wait for what we call an STB. So that is to say a price which will break downwards to mainly seek here this liquidity which is at the level of the ST, and ideally look for the liquidity which is left at the level of the SC, have something like that, take liquidity, retest, consolidate above, and there we go again. There we will have a potential signal of recovery, if we do not have a spring which would be a final bearish acceleration. We have a level which is important, which I have noted for a very long time, which is 17, so which is really very low, but which we keep in mind if we ever have a very aggressive spring. And so behind a drop of a lot of alcohol, HBAR could indeed drop on this level, we keep it in mind, which would be the low mass pot zone. But when we are in a dynamic of long-term DCA investors, it's pretty classic. What can we see as an objective? So already, first thing, is that if we want to get out of this accumulation, we will have to break this level of liquidity which was left here at 0.79, in which we will go back, we will break, we will a consolidation, we go back above, and there. We will have a signal to say that, okay, we are in the process of getting out of the accumulation, and we will have a signal which will be rather bullish to seek the first target for me, which will be here 0.18, in which we will have here a big sell-off because 1, there will be a massive profit taking, and 2, we will have here a very big resistance in which we had 1 support, 2 supports, and therefore many people who are also stuck with HBARs above 0.2 in terms of purchase price. Then we will look a little higher. I think we will find the 0.47 quite easily. 0.47 remains an X10 compared to now, so that implies a capitalization of around 20 billion, which is already rather consistent for this type of project. And afterwards, if we ever have to go much higher and project ourselves into a notion of Elliotist fractality, we would look for a big wave 1, big wave 2, and therefore look for a big wave 3 behind for an objective of 1.618 with an HBAR that would approach $1. So take into consideration that the $1 implies that we will have a capitalization which will be in the 50 billion, which is a very large capitalization, even in a bull run, which is going rather well with a colossal injection of liquidity. It still remains a very big target, so be careful with your exposure. I hope you liked this video. If so, don't forget to leave me a like and a comment. It always makes me very happy, and I'm sure you will enjoy the video that I carried out yesterday on VRA, the Veracity token. I'll put the link there and we'll meet again tomorrow, 13:30, for a slightly more specific video on a macro and Bitcoin analysis on what's going to happen, and the figures that are arriving in the US which are not necessarily positive.